Good morning, everyone. It is May the 4th, 2016. Time to kick off another trading day, and there was significant news overnight. Significant news in the United States political scene, and there's significant news to be presented this morning, released this morning. So we've got a chance to increase the volatility off the news. Everybody is surprised that China continues to develop the yuan, but this is economic survival. They built that country quickly off of becoming the world's manufacturer. Cheap labor, no environmental protection rules, overcame high transportation costs and the problems associated with manufacturing anything in China. And they're going to defend that. So the yuan had the biggest devaluation that they've had in 9 months. Germany and French markets were closed. They were unchanged, which is pretty unusual, or they were unchanged. So my guess is that they were closed. Asia's market sold. The United States market sold. The FTSE was down. So equities are lower around the globe, and that has supported treasuries, but it hasn't broken them out. So we're going to come in today with, generally speaking, defensive economic news releases, i.e. the Chinese currency devaluation, to mix to slower economic stats out of the EU. And we have a lot of news on tap this morning. ADP employment, 193. International trade, minus 41.4B. Productivity, minus 1.2. Unit labor costs, plus 3.5%. PMI services, 52. ISM services, 54.7. Factory orders, plus 0.7. And crude inventories, plus 0.6 million barrels. Now, last night's APIs grew at Cushing, but less than forecast. So that briefly took crude up to $44, and it's come back down to where it was on yesterday's close. So the news focus will be ADP first. It comes out at 8:15 Eastern, followed by ISM services, followed by factory orders that both come in at the same time. So this will be 1 and 2, 3, and factory orders, ISM services should have more weight than the ADP number. Friday's non-farm payroll number, which again is forecast to be 200,000 plus, carries more weight than the ADP number, but the market will react to it. So I think we're looking at P's. I think the first bit of support is 4 to 6. That'll be buy 1. 01 to 29 will be buy 2. I think it's going to take more selling in the E-mini today to take out the 130.16 area. So 15 to 19 is sell 1. 23.27 sell 2. I prefer the long side until 130.16 is rejected. If that is rejected, I can trade from the short side. Everything is pointed up right now. Looking at the 30-year, we've got resistance at 8 to 12. As long as that holds up, the market can trade lower, so 8 to 12 will be sell 1. I think if we break it out and take out 12, we're headed a little higher, so 19 to 23 sell 1. 27 to 31 sell 2. First area that's got to get through is 8 to 12. On the buy side, we're going to have some support at 28 to 24. First buy is going to be 17 to 21. Then 5 to 9 for buy 2. I do like the long side of treasuries better than the short side because I think the stock market can sell today. Of course, everybody's going to start talking now about the Trump effect for equities in the stock market, right? And I would have to think that the market would view that as bullish. And I think the budget deficits under Trump could be kind of where they are now, maybe even a little bit worse. And you know, the irony is the Democrat Party is always characterized as the party of peace. And if you look at it from an historical standpoint, the conditions that create war are laid under Democrat administrations. And the Republican Party traditionally has been cast as the party of fiscal responsibility, and runaway budget deficits that get out of control usually start under Republican administrations because there's no cap on the spending. They're Democrat light versus Democrat, and look under Bush before Obama came along, and Obama has put Bush to shame when it comes to spending, no doubt. But Bush created huge deficits along the way too. So just all this propaganda that these parties put out and all these images that they try to build and maintain, if you really start to look into them, it's kindly spoken would be a house of cards. Okay, looking at gold, and this is pretty interesting. Stock markets around the world have sold a couple of days, and gold's had a hard time at 1,300. Now we've had a big move and profit taking because 1,300 is held. They're probing for where support is, and the first little band of support is going to be in that 75 area. Second band of support is going to be in the 1250 area. And you can see that we had this breakout right here from 72. Then the last rotate down was 73.5, and then we've got this 77.40 last night. And we liked the 75, 77 area last night. So 75 to 80 is where we're buyers. So the first buy is going to be, I guess, 78 to 80. Then 73.75 for buy 2. Don't really like the sell side as much as the long side, but we are dealing with a B. So 84, 86. Picking up the top of value, sell 1. 89.91, sell 2. And be interesting to see if the stock market sells, if gold sells. That would be based on what has led gold or brought gold up to 1,300. That would be an anomaly. Okay, the euro. Japan and euro supposedly are defending their currencies against China's by selling. They really need to increase their exports and their mercantilist economic policies and philosophies. So we had a 115 buy, then a 114.75. 115 held, so we'll keep that as buy 1. Did not make it to 75, but if we break, buy 2, 75. On the sell side, last rotate up yesterday's stopped at 53 or at 21. Then a high of 49. Then a high of 41. So 40 to 50 sell 1, and then basically 75, sell 2. The dollar has really hurt our multinational top lines. It's hard to sell when your currency goes up. Given the competition around the globe, you may like Caterpillar, but there's 5 other companies out there that make excellent equipment that are willing to sell to you also, even though you may have all your parts inventory in Caterpillar goods. Look how Airbus and Boeing compete, and a lot of that is based on currencies, what the moment of the inking of the deals. Okay, crude. The build at Cushing could be higher than expected if last night's APIs are any indication of what's coming. We've got resistance at 44. Looks like we got pretty good support at 43.50. So 43 1/4, 43.50 buy 1. Sell is 44, 44 1/4. Sell 1. Then 44.50, 44.75. As long as we stay below 45, this market can sell. Then we're going to make 42.50, 42.75 buy 2. Now the market is sold into today's EIA inventory numbers, and that could bring in a little short covering. I think that would be the dynamic. What the market faces. To everybody's favorite contract. And the E-mini is a good contract. I think the primary reason for trading the E-mini is the fact that we've got a chance after lunch to make money. There aren't many markets that allow you to do that. So resistance is at 60. We've had good selling. We were pulled down to this high volume area at 40. The real break in the market's in that 2030, 2032 area. And we've said it a long time, as long as we can stay above 2030, this market can still trade higher. So do we get continued selling or not? The economic news overnight was mixed out of Europe, with retail sales down. A couple of countries reported improvement in their PMI service number, but overall the EU's PMI service number was down, below forecast. Italy's and Germany's were higher. Great Britain's construction was lower. EU's retail sales was off significantly. So the economic stats that come in on Europe are at best mixed, and generally speaking show economic contraction, which means that there's a possibility of QE whatever, or 2, or adding to QE1 come June. We'll have to see what happens. So 2050 is where we are right now as far as resistance. So would like to sell against 50 if possible. It may be a sell against 47. So we'll make 47 to 50, sell 1. And then 54, 59, leaning against 60 for sell 2. On the buy side, I think we're headed lower, but 40 is support. So 41 to 39, buy 1. And then 30 to 32, buy 2. Quick review of the numbers. ADP 193, I've seen it as high as 205. That would be supportive. International trade minus 41.4, won't play. No one will pay any attention to it. Productivity, nobody will pay any attention to it. Okay, productivity, we usually lose productivity at the start of a recession because people are reluctant to fire employees that they spend a lot of time and money training. Only the large companies can do that with impunity because they have full-time staffs that do that. So unit labor costs, this would be an anomaly to me, as weak as the job market is. plus 3.5%. PMI services 52, ISM services 54.7, factory orders plus 0.7, and in crude inventories plus 600,000 barrels. So the focus, ADP would be number one, then factory orders and ISM services. They hit simultaneously, will be number two. Both of them will probably carry about the same amount of clout. And this number would be supportive. These numbers would be supportive for stocks if they come in as forecast. And so you'd look for a contrary. If you're on the short side, you'd be looking for contrary. Bullish news and the market does not rally, sell it. Or the other side is sometimes good news is good news for this contract. You never know with the E-mini. Going to take a bit to get everything up and posted. Going to get busy on that. I'll be back with you as soon as possible.